It's 4 months. So to calculate that, we take 10,000 times 6%, multiply that by 4/12 this time. And that will give us 200. That's our interest revenue for 2018. So they're paying us the note, they're paying us for the interest that we charged them last year, and they're paying us the interest that was charged this year. So that's a total amount of $10,350. Moving on to the last section. Next problem, we're doing depreciation. So the first one we'll be going through is straight line. We've got a bus that we purchased on January 1st for $65,000. And we've got a salvage value of $5,000 with a 10-year useful life. And then the rest of this is for units of activity, but we'll start with straight line. So straight line, the equation is the cost minus the salvage value divided by the useful life. And that will give us our depreciation expense. So the cost in this problem is $65,000. That's the original cost. And it's a $5,000 salvage value. So 65 minus $5,000 divided by a useful life of 10 years. And that will give us $6,000 as our depreciation every year. So the question is asking, what's the depreciation expense in year 5? Well, in year 1, the journal entry, we will debit depreciation expense for $6,000, and we will credit accumulated depreciation for $6,000. Accumulated depreciation, remember, is a contra asset. It takes away from the long-term assets, which in this case is the bus. So our balance sheet in year 1 will have the bus that cost originally $65,000. And we'll have right below it accumulated depreciation for $6,000. So the net book value is $59,000. That's year 1. Now in year 2, we would, since this is straight line, we would just make the same journal entry every year. That's what straight line does. It is the same amount of depreciation every year. $6,000, $6,000 for our depreciation and accumulated depreciation. Now our balance sheet in year 2 will still have a $65,000 bus, but our accumulated depreciation will now be $12,000. $6,000 from year 1 and $6,000 from year 2 is $12,000. So our net book value is, let's see, $53,000. And now you can figure it out. In year 3, it'll be the same journal entry. Accumulated depreciation and depreciation expense are both $6,000. So in year 3, the balance sheet will have a $65,000 bus with accumulated depreciation of $18,000. Which gives us a net book value of $47,000. And the process continues. Now, the question is asking, though, what's the depreciation expense in year 5? In year 1, the depreciation expense was $6,000. In year 2, the depreciation was $6,000. Year 3, $6,000. 4 and 5 are both 6,000. So the answer to question 13, depreciation expense equals 6,000. We can also calculate what the accumulated depreciation will be in year 5. If we follow this pattern, in year 1 it was 6,000, year 2 it was 12, year 3 it was 18. We'll just keep adding 6,000. So we can say 6,000 per year, 5 years, that's $30,000 for the accumulated depreciation in year 5. We can also, we'll stick to that for now. So now we'll move on to double declining balance. Double declining balance uses a different equation. We have the cost times the straight line rate times 2. And recognize that there is no salvage value. So in straight line, we had a salvage value, but in double declining, we do not use a salvage value. So the cost is still $65,000. The straight line rate is just 1 over the useful life. So it's 1 over 10, and then we'll double that up. Calculate that out. 65,000 times 2 divided by 10, and you'll get 13,000. This 13,000 is our depreciation expense, so we will debit depreciation expense by 13, and we will credit accumulated depreciation by 13 as well. That is year 1's journal entry. And our balance sheet for year 1 will have the, a bus minus the accumulated depreciation gives us our net book value. The bus was $65,000. Our accumulated depreciation is 13. And that gives us a $52,000 net book value. Now, with double declining balance, we don't use the same depreciation every year. We now use this carrying value, 52,000, in our new equation. So just like before, we plug in 52 as the cost or the depreciable base, times the straight line rate times 2. So we will say we've got $52,000 times the straight line rate, which is still 1/10, multiplied by 2. And that gives us $10,400. So there we go. There's our depreciation expense, $10,400. And our accumulated depreciation of $10,400. That's the journal entry in year 2. So year 2's balance sheet will still have a $65,000 bus. The accumulated depreciation will be the 13 from the previous year and this $10,400 from this year. Add those together, and it's $23,400. And find the difference from 65,000 gives us a net book value of 41,600. Then you would use this 41,600 in this equation. 41,600 times 1/10 times 2 gives you your new journal entry, and then you can continue on with the pattern. So this question is asking for the depreciation in year 2. Our depreciation was 1040 or 10400, and our accumulated depreciation in year 2 was 23400. But to answer this question, our depreciation is 10400. It's important to know with double declining balance, in the first years you have a large depreciation and it gets smaller as the years go by. So in year 1 we have a 13,000 depreciation, year 2 it's 10,400, year 3 will be smaller, and so on. Unlike straight line, where our depreciation expense was the same every year. Double declining balance has large depreciation and it gradually decreases. Okay, we can move on to units of activity. With units of activity, we take the cost minus the salvage value divided by the number, the estimated number of units. So it's very similar to straight line. We take the cost minus the salvage value divided, instead of dividing by the useful life, we divided by the total number of units that we think that this piece of equipment will create. So in this question, for units of activity method, assume a useful life of 200,000 miles and assume the bus is driven 34,000 miles in year 1. So in this case, it's not really units, it's just, it's in miles, but it's still like units of miles, if that makes sense. So our cost is still $65,000. Our salvage value is still 5,000, and our estimated number of units is the 200,000 miles. That will give you 0.3, or you can think of it 30 cents per mile. So every time we drive a mile with this bus, we will depreciate it by 30 cents. In year 1, we drove it 34,000 miles. So we're going to depreciate it by 30 cents per mile. So multiply, and you should get $9,000. There's our depreciation expense, 9,000, and our accumulated depreciation is 9,000. So again, you can make a balance sheet. We would have a $65,000 bus, subtract the accumulated depreciation to give you your net book value. Now we'll move on to to answer this question, what's the depreciation? The depreciation is $9,000. We'll move on to the same problems, except now instead of buying it on January 1st, we'll change it to, let's change it to August 1st. So now the first year, we're not going to depreciate it a full year. We're only going to depreciate it through August, September, October, November, December, for 5 months. So let's start with straight line. Straight line, as we know, is the cost minus the salvage divided by the life. But we're going to multiply it by the portion of the year, and we'll talk about that in a second. So the cost is 65, salvage is 5,000, the useful life is still 10, but we're only depreciating it for 5 of the 12 months for this first year. 65,000 minus 5,000 is 60, divided by 10 is 6,000, times 5/12 gives you 2,500. So there's our depreciation expense and our accumulated depreciation for year 1. 2,500, 2,500. So again, we can make a balance sheet. For year 1, the bus is 65,000. The accumulated depreciation in year 1 is 2,500. Subtract that from the value of the bus, and you'll get 62,500 as your net book value. Now in year 2, we need to recalculate, because in year 2 we had it for the full year. So we're going to do the cost minus the salvage value divided by the life times the portion of the year that we had it. Now, some of you may recognize 12 over 12 is multiplying by 1, and that is correct. Or when you multiply by 1, you get the same answer, so you don't even really have to do anything. So 65 minus 5 divided by 10 gives you 6,000, which is what we calculated before. And our accumulated depreciation and depreciation expense is now back to normal. So year 2 will have this same journal entry, and all years after will have the same entry. So year 3 will have depreciation expense at 6, accumulated depreciation at 6. Year 3 will be the same, year 4 will be the same. It's only the first year where we have different numbers, because we only had it for 5/12 of the year. Okay, so there's straight line. We can move on to double declining balance. Using DDB, we said it was the cost times the straight line rate times 2. Again, no salvage value involved in DDB. Our cost is 65,000. Our straight line rate is 1/10 times 2. But then we're going to multiply it by 5/12, just like in straight line. So we got 65,000 divided by 10 times 2 times 5/12. And that gives us 541, or 5,416 about. So there's our depreciation expense, 5,416, and our accumulated depreciation is 5,416. So we can make a balance sheet. In year 1, the bus was 65,000. The accumulated depreciation is 5,416, and our net book value is 59,584 about. And just like in the previous problem we did with DDB, we will use this number in our new equation. So we will take 59,584 times the straight line rate, double it up, multiplied by 12 over 12, which is multiplying by 1, or you can just ignore it altogether. 59,584 times 2 divided by 10. That gives us 11,916 about. So there's our journal entry for year 2. We've got depreciation expense of 11,916 and accumulated depreciation of 11,916. So then here on out is just the same thing with DDB. You would make a balance sheet, $65,000 bus. Accumulated depreciation is now 11,916 plus the previous accumulated depreciation, and you'd get a net book value and then continue the cycle. For units of activity, the fact that we changed this number does not affect units of activity at all, because it will give you how many units it produces in year 1. So for units of activity, if this number is different than January 1st, if it's 5/12 of a year, do it the exact same way we did before. It does not affect it. It only affects straight line and double declining balance. So the last part is going back to straight line. In the previous, most recent straight line question that we did, we said at the end of year 1, here, let's go another year. So year 2, we've got $65,000. Depreciation was $6,000 plus the previous balance, which is $8,500. So our net book value is now $56,500. There we go. Now let's say in year 2, at the end of year 2, we sold the bus for $60,000. What's the journal entry? Well, someone's giving us $60,000, so that's a debit to cash for 60. We're also going to get rid of the equipment, or I'm sorry, not the equipment, the bus. So a bus is an asset. So to get rid of an asset, we got to credit the bus by its original value of $65,000. Connected to this bus is the accumulated depreciation, so we got to get rid of that as well. Accumulated depreciation, remember, is a contra asset, which means accumulated depreciation, here's its T account. It's got, as of now, an $8,500 balance. It's a credit balance because it's a contra asset. So to get rid of this accumulated depreciation, we're going to debit accumulated depreciation by $8,500. Now this difference, we need a credit, it looks like. So how much do we need as a credit? 68,500 minus 65. We need a $3,500 balance as a credit. That credit is a gain on the sale. There's our journal entry. Now you may be asking, where's this $3,500 coming from? Besides adding or finding the difference between these two, we sold the bus for $60,000. To us, it has a value of $56,500. So we're selling it more than what we value it at. So we are going to recognize a gain for the difference between 60 and 56.5. We can also, let's say in year 2, instead of selling it for 60, let's say we sold it for 55,000. What's the journal entry there? Well, obviously we're getting cash for $55. We're still getting rid of that accumulated depreciation of $8,500. And we're still getting rid of the bus for $65,000. And from here, we should see that we need a debit for $1,500. That debit is going to be called a loss on the sale. And again, we can see the bus is valued to us at $56,500, but we're only getting $55,000. So that difference, we're getting less money than what we valued it at. So we're going to recognize this difference as a loss. Or you can just find the difference between these two. Recognize that it's a debit loss. And the last scenario that could happen is in year 2, we dispose of it. So we don't get any money. So there's no cash involved. We're going to get rid of the accumulated depreciation, which is $8,500. And we're going to get rid of the bus for $65,000. And this difference, $65,000, is $56,500. So that 56 is coming from the difference here, or you can just think this bus is valued at $56,500 to us, but we're not getting any value by throwing it away. So we'll recognize it as a full loss. So Professor McCarthy said that these accounts may be new to you: a gain on a sale, a loss on a sale, a loss on disposal. He said as long as you write gain, you don't have to really write down gain on sale. You can just write gain, you can write loss, or you can just write a loss here. It doesn't really matter. As long as you know a gain is a credit and a loss is a debit. It's kind of similar, or it is just like a revenue. Revenues and gains are very similar, and they are both credited. Losses and expenses are very similar, so they are both debited. So there's all of the problems for exam 2. Hopefully this video was helpful. Good luck studying. Thank you for joining.